Starting receiving your content. Well, now we're live. Okay, now. Hey everyone, this is James coming to you from Sarasota, Florida, where it's warm, sunny all the time. Getting ready for our 9 o'clock show, doing our dividends investing. So let's jump on over to that and let's get started. Okay, so you're all familiar with the 10-minute trader, where we like to trade 10 minutes a day and basically increase our monthly cash flow and not monthly cash flow, what do you call that? And just move along. Well, anyway, let's get started. Okay, so I need to get into the, what do you call those, disclaimers first. Number one, I'm not here to tell you what to do. I'm not gonna give you advice. I'm just gonna tell you what I would do in certain situations. This is all basically educational. Take the information, decide for yourself what's right, what's wrong, what's good for you, what's not good for you, and you do what is best for you. Okay, so I want to get started right away, and let's look at who we are looking at today, and we'll go from there. Let's get to our trading screen right here, and here we are. Today is the 24th of November. 24th of November, right? As you can see, there's nothing on this list on the 24th of November. This is my Think or Swim. This is where I go to get a lot of my stuff. I also go to, where are we? Right here? Nope. Let's go to the other one. Right here? Yep. I also go to the NASDAQ, NASDAQ.com. I look for dividend stocks for the day. So November 25th is tomorrow. November 24th, which is today, you're going to find there's going to be nothing there. Give us a minute to repopulate. There it goes. Blah. Nothing for today. So tomorrow, look who we got paying out dividends for tomorrow. Come on, populate. Let's go, let's go, let's go. And there you have it. You know what I find rather interesting? Okay, let's count all these stocks. You got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11. Now, let's go to over here to thestreet.com. How much do they have for the 25th of November? See right here, 11, 25, 16. They only have 6. There's 5 missing. Okay? And let's go here. They've got 11. Okay, explain to me. It's the stock market. Everyone should have the same amount of data or the same data, but they don't. So what's with that? All irrelevant. Wherever you get your list from, I really don't care. Okay, you take your list, import it into the calculator. Now I have 2, if you remember. Let's see where they are. Righty. Now we already did our list for this week. It's already got sent out, and let's open up a new window. So here we go, and we're opening it up, and come on, let's go. So I can't help that the computer goes slow because we're streaming at the same time, and that takes up a lot of data, so it's probably getting congested a little bit. We're going to take a quick look at what the dividend calculator says. Now, for November 21st, if you're on the list, this is what you would have gotten. You would have received access to this. Dividend capturing, it's quite a bit. Very rarely do I have this many for dividend capturing, but let's quickly take a look at what's on the list today. Okay, not today specifically, but for this week. FORR, ESCA, REIS, DPS, ABY, PXIR, TXT, blah, 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 blah. This one you recognize right there. It's Walmart. Right up there on top of the list. ADP, probably heard of them. Anyway, that's 16. Here we get to 32, all these. Oh, Halliburton, they're on there. 48. 48 companies, 85, look at this number right here. 85% or better. Okay? 85% of the time, these guys are making money and doing what we want them to do. So let's go and actually go through some of the tips right now. Open up the new software. I already took the liberty of... Okay. Now, today being the 24th, we're going to be looking at stocks paying on the 25th or getting ready to do on the 25th. Now, if you read any of my books or saw any of my videos, you know that I like to go 10 days out. Okay, so tomorrow, these guys are all paying out their dividends. So if you want to collect any of these, you would have had to go buy them today, but you can't. Or Wednesday, Tuesday, Monday, anytime before the close on Wednesday. Okay, if you buy them tomorrow, you're not eligible to collect the dividends, so don't even bother. That's why I like to go 10 days in advance. So today, being the 24th, tomorrow, openings 25th. So we're looking at 10 trading days, the 9th. Okay, the 9th of December. Unfortunately, Thinkorswim doesn't give me the 9th of December until like 3 or 4 o'clock in the morning. Then they give me the list. Or should I say, they give me their list. That's why I look at these guys right here. Not those guys. These guys right here. Okay? We want to look at 10 days from tomorrow. Tomorrow's the 25th. 5 trading days would be the 2nd. 10 trading days would be the 9th. Okay, so let's click on that. There's only 3 dividend stocks paying a dividend on the 9th of December, according to thestreet.com. Now, NASDAQ, let's see what they have. Okay, so that's tomorrow. All right, 5 trading days would be December 2nd. Let's go 10 trading days. Hit this one more time. That's going to give me another week, which would be December 9th. And that's the one we want to look at. And let's go a little faster. If I wasn't streaming, it'd probably be a lot faster, but that's where we are. Okay, then December 9th is going to pop up. Come on, December 9th. Or I could have just done it in the browser. Okay, who do we got on December 9th? We got 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 companies. Okay, NASDAQ.com has 9 companies. And the Street only has 3. Why is that? I don't know. But anyway, if you import these stocks into the software and these, you're going to get what we're looking at. So I already did that. Okay, here we go. Now, I'm going to open this up a little bit more so you can see better and see what we're looking at. All right, you don't need to see that. You don't need to see this. You actually don't even need to see the stocks. Well, give you a good idea. Now, I'm going to explain to you what I'm looking at so you get a better idea. Now, this software goes through a small chunk of time, 10 days prior to the EX date and 90 days after the EX date. Why? Because we want to collect the dividend. And the dividend for each stock is listed down here. Okay? For this stock it's 24, this stock it's 6 cents, this stock it's 3 cents, this stock it's 26 cents. Whatever it is. We want to collect that amount, usually a lot quicker than waiting to hold it, and we don't want to have to wait too long. So what I did, the software tells you how many days after 10 days prior to the EX date. Okay, so let me bring up the calendar just to give you a quick reference. Okay, so today's the 24th. Let's forget that it's Thanksgiving. 10 days prior to the 24th, 10 trading days prior to 24th would be the 10th. Okay? So, for you to look at this list to get into on the 10th, you would have to receive it on the 9th. Okay? So, 10 trading days before the 24th, you'd receive the list on the 9th. Then you'd make your trade. So let's hypothetically say this is what we're looking at today. Okay, so to get into tomorrow morning. Do you understand that? So tomorrow morning would be day 1, the 10-day time frame to be 10 days prior to. Got it? Okay. Now, I want to get in, I want to get out quick. I don't want to hang out. I don't want to marry the stock. I don't want to hold it forever. There's certain criteria I'm looking for. So let me quickly go over what it is I'm looking for, and you can follow around. Okay, the stock symbol is AYR, plain and simple. These numbers up here, 50, 75, and 100, they represent the percentages of how much percentage of the dividend. Okay, 50% of the 24-cent dividend is going to be 12 cents. 75% of that is going to be 18 cents, and 100% of that is going to be the whole 24 cents. Okay, how long does the stock take historically to reach that target? Now, 2007, you can see right here, it reached it in 1 day. 2008, it reached it in 1 day. 2009, it took 11 days to get there. So on and so forth. Down here, this is the average. On average, how long does it take to get there? And this one takes an average of 4, 5, 6 days, somewhere in that area. Okay, I can live with 4, 5, 6 days to get a 24-cent gain. I really don't mind. However, something about this stock I do not like, and I'm about to tell you that. Look at the trading volume, 300 shares. Do I really want to trade a stock that only has 300,000 shares? Probably not. But before I get rid of that, let's get rid of the extremely obvious ones. Number 1, I don't like chasing anything under 10 cents. 6 cents, and look at this. No history, so bye-bye. All right, this one, we're missing 2 years. Why did they not pay those 2 years? I don't know. Do I want to buy a stock that's not consistent, not continuously paying? And 2 other things going against it. 20,000 shares traded every day and only a 3-cent dividend? No, thank you. Okay, GXP. I don't really know who they are, really irrelevant. But look, they're paying a 4% dividend, 4 million shares traded on a 30-day average, and a 26-cent dividend. I like those numbers. Could I hold it for a week? That'd be 2 weeks. To collect the 26 cents? I don't know. Let's see what else we got. IMOS? No, thank you. Bunch of zeros. Not enough data? Get rid of it. Key. K-E-Y. Never heard of them, but look at this. Ones all the way down the board. Ooh, I like that. All right, 8 cents. 8 cents is kind of close to 10, so I might hold on to this before I decide to get rid of it, because it's a $17 stock. 8 cents is it's almost 2% yield. I can deal with 2%. 2% is okay. This one, not enough history. Only 5 years. No thanks. 2 years worth of history. No thanks. SSI. I like the numbers up here, top numbers. 1 day, day and a half, a little over a day and a half. It's a $4 stock, and it's paying 15 cents. Oh, so that's 13, almost 14% yield. If I held it up, I got a sneaky suspicion the chart's not going to look very favorable for this one. But let's move on. Oh, what did I do? Let me get back to where I was. Alright, we didn't like Key. I didn't like SSI. Alright, this one only 200,000 shares, missing a bunch of data, get rid of them. Okay, so we're basically, for tomorrow, looking at 2 stocks. Okay, I'm not 100% happy with the last 2. So let's quickly take a look at the chart and see what the chart is telling us. This is going to take us right to Yahoo Finance, and it's going to give us 10 years worth of data to look at. Why 10 years? 10 years is a nice number. And this, I can tell you within less than a half a second, no thank you. Why? Here we go. 10 years ago, this stock was at 20 bucks. Come on, get up there. Here we go. It was at 20 bucks. Today, it's down to 448. No, thank you. And look at this. Over the last year, dropping. No, thanks. Not with my money. All right, SSI, no, thank you. Okay, now, Key. Let's take a chart for Key. K-E-Y. I don't know who they are. I don't know what they do. Key Corporation. Doesn't really tell me a whole heck of a lot. Now, does it? Again, less than a couple of seconds, I can tell. 10 years ago, this thing is way up here, $38. You lose 50% over the last 10 years. No thanks, something's going to be wrong there. However, over the last 8 years, a nice increase. Or the last 6 years, sorry, from the low point here, 6 years ago, the low, to here. I'm a little iffy on that one. If I buy it now, she's been a steady upclimb for the last 6 years. Is that enough? I don't know. It might be for you, but for me, I'm going to pass. It's only 8 cents. I don't like 8 cents. Okay, GXP. All right, do I want to hold it for 2 weeks to catch that 26 cents? Let's see what they look like. You know, because I don't like holding on to stocks for longer than I have to. 10 years. This is another one that doesn't look good. All right, over the last 6 years, she went from 13 to 26, so she doubled in the last 6 years. But the last 10 years, it was at 31, now it's down to 26. Makes me uncomfortable. Okay, so we're saying no to GXP. All right, 24 cents, 4.5% yield. What are you looking at? Gotta give me one kind of winner. Air Castle Limited. Another one. Come on. 6 years ago, we're going from $4 to 22. Wait a minute. 328 to 22.68. That one, you know, it sounds favorable. It's been paying all these dividends all this time. Had a stock split of, what, in 2010. All right. Let's try this one. See what it says. See what it does. AYR. Okay, so we want to bring up this. Go to AYR. Okay, so for the last year, hit a low in February of 15 and a high right around here at 22.97 for the high of the year. That's for this past year. Now, I'm going to show you something that not many people play with or don't even know exists. The seasonality chart. What does this stock normally do? Now this I like. I can get around this. This is what it's doing right now for this year. This is what it's done historically, or seasonality, what it normally does. And we are right about here. So what is it going to do for the month of December? It looks like it's going to have a little bit of an upswing, a correction, and then go up. Now, to be honest with you, I haven't checked with Thinkorswim to find out what their criteria is for the seasonality. How many years of data are they using in order to get that figure? All right, so we're going to look at AYR. AYR. All right, now they have monthly options. They don't have weekly options. Now we're going to tackle a little bit of options today because today's Thursday. Thursday's my option day. Why? Because Thursday all the new options come out. The weekly options. I love weekly options because it allows me to get a weekly cash flow. Okay, so what can we do with this stock? It's at 22 bucks. Okay. Let me show you one more piece of software that I have. And that would be... Nope. Not that one. That would be right there. And we're looking at AYR, right? So let's go AYR. And we want to hit plot dividend. And there we have it. This is what she's done in the last 10 years. Okay, we don't need that top stuff. Okay. Now these red dots represent each year. They represent the dividend of each year. The blue line represents 2016. So let's get 2015. Anyway, here's our average. Okay, like I said on the other one, she dips a little bit, comes up to the dividend date right here, and then she makes a steady climb, which is nice. The last 90 days over the last 10 years, that's what she's done. So we're going to do that? Of course we are. I like this one the way it looks. Okay, I can go for 4.58 if I'm stuck with it. So let's go back and make a trade. All right. So now that we know we want to trade this one, what do we want to do? Do we want to buy the stock and just collect a dividend or collect a dividend run up? This is a question that only you can answer, because I have several different trading strategies and they're all based around the dividend date. Now for AYR, the dividend date is 10 days from tomorrow. Okay, so I have 10 days to make the move that we want to make, and we're looking for like a 24-cent move. So let's click on here, buy custom. Now this is already preset for the dividend on steroids strategy, where it has the trigger trade at 2.5%. I can change that if I want. I can make a trailing stop if I want. But for the most part, we're going to stick to this right here. It's already pre-populated, 100 shares. How many shares do you want to buy? Let me see. Alrighty, calculator. Clear that. Put in our numbers. And how much was the stock last? I'm not going by the ask price, because you see this huge spread between 19 and 25. That's what the market maker does after hours. The last trade was 22.68, so that's the number I'm going to use, 22.68, to make my calculations of how many I want to buy. Okay, 22.68, and I can get 2,200 shares. I rounded off to 100, that way I can sell options against it. Okay, let's get out of that. 2,200 shares. 2,200 shares. All right. Now, all right. This is what the order confirmation looks like. Order number 1 is buy 2,200 AYR at the market, which means first thing in the morning, this order goes in, and I will be filled at 9:31 a.m. The nice thing I like about Thinkorswim, it allows me to do the trigger trade, which is this. And this is incorrect. I have to edit. Okay, I want to sell. Whoops. See, whenever you change this changes. All right. Trigger 2.5% limit, day market limit. Okay, let's take a look. That looks better. Order number 1 was buy 2,200 AYR at the market. Okay. Order number 2 is sell 2,200 AYR at the trigger plus 2.5%. Okay. Triggered by the order number 1, which is this order. So whatever this fills at, this is going to automatically multiply it by 1.125 and make my sell order. So let me double check that. Make sure that's right. See? Percentage 2.5. Okay. See, now that's better. See? And off she goes. Well, that's how I do that one. Now, if I wanted to do an option, let's take a look at an option trade. Now, these ones are going to expire in 4 weeks. All right, 20 seconds. The stock is at 22.68. 22.68. Now, you can buy a spread, you can buy a call. If we wanted to sell a put, single over here. Now let's say we want to buy it at 22.68. The closest one we have is 22.50. If I click on this, somebody will sell this to me at 22.50, and they're going to pay me 55 cents per share in order to do that. What does that mean? That means basically I am collecting 55 cents today or tomorrow when the order goes in, and I'm on the hook. If this thing at the end of expiration falls below 22.50, I have to buy it at 22.50. I do. But I already want to buy it anyway. But I want to buy it today. So anyway, I can hit confirm. What does it mean? It means the most I am going to get is $535, and I have to put $4,400 aside in order to do this trade. Okay, now that is, quickly take a look at this. $535 divide 4,400. That's a 12% return in 1 month. Okay, so if this stock, let's go back to the chart so you can see it. I'm not going to put it through. Let's go back to where it is. Seasonality, standard. Okay. Now let's. Let's take a look from here over. Okay, what this option basically is telling me, I need a little bit more space over here. Okay. The 22.5. 22.5 is right here. Okay? This is where 22.5 is. So if this stock drops below the 22.5 in the next 30 days, I have to buy it. And he's giving me 55 cents in order to do that. Which is not bad if you think about it, because right now the stock's at 268. Okay, so the way I look at it, this stock has a tendency to move up coming into the dividend play. Let's get back to that chart. Where is that chart? Here we go. 10 days prior to, right there. Make this a little bit larger. Okay, here we go, right here. Coming into it, the dividend, right there. And she has a nice steady move. 10 days prior to, nice steady move over the next 90 days. So, is it going to drop below 22.5? Or is it not? It doesn't really matter. I want to buy it anyway because I want to collect a dividend. But it's so far out, it's 22 days out, and it will already have paid its dividend before then. So this is after the fact. So I'm just collecting 55 cents for a stock that most likely I won't have to buy based on historical performance. And it's like, what was that, 16% return? 15, what was that? 12 right there. 12% return for 1 month. That's not bad. I think I can deal with that. Alright, that's basically all I got to go over with today. I want to keep this down to a half hour until I start getting some interaction. This is just a practice run to give you an idea what we're going to cover, what we're going to go over. When we get into more in depth, when we actually get some interaction, we'll start making these a little bit longer. But for now, this is, like I said, a practice run to see where we're going. This is James, and I'm going to check out